Now, the Nigerian Stock Exchange was the third most profitable bourse in the world last year, behind Egypt and Kenya. CNBC Africa's Keisha Gitari caught up with the NSE CEO, Oscar Onyema, to get his thoughts on the market's performance in 2012 and his outlook for 2013. She started by asking him how the exchange is planning to encourage more listings this year.
Yeah, last year we announced that we were expecting about 20 companies, like you rightly pointed out. Market conditions did not really change until the end of the second quarter and the third quarter. So we believe that given the momentum we've seen in the fourth quarter and into the new year, that we should have a more robust level of activity in the primary market. As you are aware, a number of companies did announce that they would list last year and then ended up moving the dates. So we are actively engaging the companies. We have what we call our hot list, where we want to make sure that we are with them every step of the way to make sure they qualify, because we want to bring only good quality companies into the marketplace. So we're very optimistic that this year we'll see some IPOs and we'll see a number of listings. As you know, we've already listed 2, and we just have to keep pounding the pavement to make sure that we bring in the right types of companies.
Over time, we've seen the continual domination of the markets by foreign investors. But early this year, we hear of an increase of local investors to about 40%. What does this say about the possible domination of the market by local players?
You're right. The level of participation by local participants increased by about 38%. So now you have about 40% of market activity that is driven by local investors. We expect their participation rates to continue to increase this year as PFAs come back into the marketplace in full force and as retail market participants come back into the market. That doesn't mean that foreign investment allocations are decreasing. If anything, they're increasing. So what you're seeing is really a faster pace of monies coming into the market from the locals versus the foreign participants.
In a bid to create more liquidity within the markets, we will be seeing the launch of retail bonds trading on the NCM. We've also heard of the announcement of 6 dealing numbers to this effect. What are the expectations for the fixed income market this year?
The whole strategy around our fixed income offering is to offer a marketplace where retail participants can come into the market and buy fixed income products through their stockbrokers. The reason is that in the Nigerian fixed income space, it's really an OTC market and it's very institutional. So the minimum ticket size is about 100 million naira. So that means that you're excluding a lot of ordinary Nigerians that could be participating in that space. And so what we're trying to do is to create a market that allows investors to be able to diversify their portfolios across asset classes. And that's why we want to make sure we have at least 5 products by 2016. Fixed income, we already have about 57 fixed income products listed on the exchange. Federal government bonds, state bonds, and corporate bonds. So you need an active secondary market in there. So everything seems to align, the technology is there, and now we have the 6 firms that are going to be market makers, and they will make markets across the all of the 57 bonds that we have. In addition to that, the Debt Management Office has appointed Stanbic IBTC as the government stockbroker. So they will be the liquidity provider of last resort in federal government bonds. We're also working with AMCON, which is the largest issuer of corporate bonds in Nigeria, to see how we can also leverage an AMCON appointed market maker as a liquidity provider of last resort.
And finally, can you give us your outlook for the markets for the year 2013?
For 2013, we do have a number of key initiatives that we announced today. We want to relaunch our ASM platform, which is our market for small and medium enterprises, around the new listing standards that we rolled out last year with the nominated advisor framework. We also want to make sure that we introduce a stronger regulatory environment. We're introducing a whistleblowing program. We're also going to be rolling out an issuer portal so that companies can submit their financials in an automated fashion, and also that fashion is searchable and provides a lot more information.